Hello guys, welcome to my YouTube channel. My name is Wilfred. Today we'd like to guide you on how you can do future trading just within your Getayo application. Remember to like and subscribe to this channel. Future trading lets traders participate in market movements and potentially profit by going long or short on future contracts. Getayo Futures allows you to use different leverages to reduce risk or potentially amplify profit in volatile markets. For you to navigate to future trading page, first of all, log into your Getayo account and click Trade on bottom side. Select Futures. On top left, we have trading pairs. You can select different pairs according to your analysis. For my case, I'll be selecting Bitcoin against USDT. As you can see, BTC against USDT. Just below that, you can see cross, and you also have a leverage of 10 times. Generally, under future trading, we have two types of position, that is cross position and isolated position. As when you click on cross, it gives you an option to select between cross and isolated. What is the difference? The cross position mode supports all cross position trading pair which shares the margin. So if liquidation occurs, all assets will be liquidated. Let me say you're having some of your funds into spot wallet and others into funding wallet. Let me say liquidation gets you into that trade. It means all your funds, both in spot and future accounts, will be affected. For isolated position, a trading pair corresponds to an independent position, which means that the position margin are isolated from each other and the profit, loss and margin are calculated independently. One position is liquidated, it will have no effect on other trading pairs, right? Let me say you're using hedge mode, whereby it involves using two different pairs. In case one pair is liquidated, it won't affect another pair. Or you're having funds onto your spot account and another one onto your futures account. Let me say you have set $50 to be used onto your futures account. That means in case that $50 got liquidated, your other funds in the spot wallet won't be liquidated. For this time, I'll be using isolated margin, then you confirm. So you can select your position. You can also select the leverage. As you can see, I selected then, as you can see, 50. You can adjust the leverage depending on the way you're trading. Just to remind you that the higher the leverage, the higher the risk, and also the higher the profit in case the trade goes on your side. For my case, I'll be using a small leverage. I prefer using 10 times for the case of BTC. Down here, we have open and close. Open means you want to enter into a trade, be it long or short. Then close, it means that maybe you have a running position and you just want to close the position immediately or at a limit order. Then it gives you that option as well. So for this case, we want to enter a trade. So just before I enter trade, we'd like to explain to you all this. Then we have different types of orders. As you can see, just below open and cross, we have limit. When you tap on limit, it gives you a variety of orders. In this, I'll be explaining limit and market order. Market order is an order to buy or sell at the best current available price. So it is basically the fastest way to get in or out of market. When you are setting a market order, you are basically saying, I would like to execute this order right now at the best I can get. For the case of limit order, is an order to buy or sell an asset at a specific price or better. This price is called the limit price. Buy order with execute at the limit price or lower, while limit sell order will execute the limit price or higher. So when you are setting a limit order, you are basically saying, I would like to execute this order at this specific price or better, but never worse, right? We'll also like to explain some of the features here: open long, open short. Generally in spot trading, a trader can only profit when the value of an asset increases. But now here on future trading, lets traders potentially profit on both directions as the value of an asset rises or falls by going long or going short in a future contract. So by opening long position, a trader buys a future contract with the expectation that the contract will rise in value in the future. You are anticipating or expecting the BTC to rise to 65,000. That means you will open a long position. Conversely, if a trader anticipates that the contract price will drop in the future, they can sell a future contracts to go short, or they can open a short position. For example, you anticipate that BTC might drop to 63,000. For this case, it means you will be opening a short position. I also like to explain one of the risk management strategy that you can employ onto this. We have TP and SL. TP simply means take profit, SL simply means stop loss. We also have advanced version where you can check and see the percentage of returns you might be expecting to receive or lose in case the trade goes against you. Let me say you want to do a market order, you want to buy BTC USDT contract, or you want to open a long position. So what I'll do, I'll come here, I select BTC USDT, I select the position that is isolated, I enter the leverage I would like, then I'm opening the position, click on open, then you select market order, then you enter the amount you like to use for this particular trade, click advanced. So maybe I'm anticipating that BTC will rise to 7,000. That means I'll be receiving 40% returns, right? So in terms of USDT, it is also calculated down there. I'll be receiving 8.08 USDT as form of return. And maybe I'm anticipating that in case BTC happens to drop or go against me, let me lose only 15% of what I'll be using into this particular trade. So you find that I'll only be using 2.9 USDT. So onto this, because I'm using a market order, I just click confirm. When I click confirm, I come right in here. It is a long position, so I click open long. The position will be active. As you can see right down here, it is an active position currently running. That is how you can execute market order. I think I can now take you through how you can do limit order. So for the case of limit order now, this is a waiting order. Let me say I want to buy BTC when it has collapsed to a certain level. Let me say 64,300. Currently it has 64,448. So BTC, in this case, I'll be selecting the limit. I select limit order. So I want to buy BTC when it has collapsed to 63,300. For this case, maybe I'm anticipating that BTC will collapse to 64,300. After there, it will rise again. So I don't want to miss out. So I just set my order. I enter the amount I would like to use. Maybe I would like to use 200 as well. Then also it is giving you an option to set your stop loss and also take profit. As you can see, there is an advanced that you like to use in advanced. Just click on advance. I say in case that order get executed, I want to receive 50% return. It will be 67,500. And in case in case it goes against me, let me lose only 10% or 15% of what I'll be using to trade. So still as well, you can see I click right down here, confirm. After clicking confirm, to bring you to a page to now open position. You open position, but for this case, you're opening at a limit order. So you open position. So this now will be an order waiting to be executed. Remember, this is not yet executed unless BTC collapse to that particular point is when it will be executed. So as you can see right down here, we have order. So order is this still waiting order, waiting BTC to be executed. So that is specifically how you can really place limit and market order in terms of buy long. Let me say you are anticipating that BTC will collapse. What will you do? Will collapse to maybe 63,000, right? So for this case, you'll open a short position. Let me say you are anticipating currently you want to do it at a market price. You come right up here on limit, you click market, then you enter the amount you like to use. And to this case, like to use $50 of what you're having. Then right down here, you enter the advanced mode. Also, I'd like to take you through one of the features that is very amazing. We also have hedge mode, whereby hedge mode allows you to enter different pairs or to trade different pairs. We have single mode and hedge mode. When you click on top right, go to trade settings, select trade settings, then you go to trading. As you can see, we have position mode. Select hedge mode. Hedge, you are opening long position. As you can see, you have open long and open short. So for this case, you'll now be required to click open short, right? So you enter the amount you like to receive, maybe 50% in case trade goes on your way. So that means you'll be, in case BTC drop to 61,200, you'll be receiving 202.25. That is depending on what you're trading with. And also, let me say, you also set a stop loss in case the trade now goes against you. In case setting to sell and the price now goes up, it will be now against you. Say, let me lose only 10% in case it goes against me. So that means I'll be losing 0.45. So for that case, you can just click confirm. It will be running order since you are buying at a market price. As you can see, currently we are having right down here, we are having one position. When you just click open, it means you are opening short position, right? You're anticipating for the price to collapse. So when you open short position, it means it will be open immediately. So as you can see right down up here, this is our first position at market price. It is still running. Right down here, as you can see, we have a short position. So that is how you can also place a market. In case you happen that you want to cancel one, you can just close position. When you close position, let me say for this case, when you click close, you are closing this particular position at the current market price, right? You can also close at a limit as you wish. So you click confirm. When you want to sell at limit order, is still as well. So now for this case, you are selling at limit. It shows that maybe you are anticipating that BTC is currently trading at 64,436. So you are anticipating that BTC will rise to 64,700, then after which it will collapse again. So what do? You set your limit order to at a price 64,700. So let's come back. So it means I'll set my limit. I come here on now market, then I select limit. So I say that I want to sell my BTC when it has risen to 64,700. That is my expectation. It will rise maybe to that particular point and it collapse again. So I enter the amount I would like to use for this particular trade, maybe $100. Then I also go to advanced. I say I want to receive a return of 50%, and also, sorry, this is short position. Make sure you click as up here, you can see short open short. So I want a return of 50. Then in case it goes against me, let me lose only 10% of what I'll be using into this trade. So after which I'll come down here and click confirm to open a short order, but now by use of limit. So I click short. So that will be pending order, which as you can see right down here, it is now orders 3, so which will be waiting to be executed. Still, I can cancel these orders in case you wish to. If it doesn't go the way you expected, you can cancel all these orders. So that is specifically how you can do future trading. Thank you for watching. Remember to like and subscribe to this video.